Well, economists at Citibank have bounced the ball on the next Europe crisis game, this time about Spain. They said overnight that the risk of a euphemistic debt restructuring, a la Grec, is higher now than it's ever been, despite all the liquidity sloshing around Europe thanks to the European Central Bank's money printing. Ireland and Portugal aren't out of the woods either. Investors reacted by unloading some shares in the US, Europe generally, and especially Madrid, and in Asia today. The All Ordinaries Index eased 0.2%, and the biggest news was another shock downgrade from Leighton, because it's losing more of a fortune on the Brisbane Airport Link project and the Victorian desalination plant. 148 million in Brisbane and 106 million more at the desal plant. Investors headed for the exits and the price fell 6.7%. Bank of Queensland lost most of yesterday's 8% gain. BHP went down and Woolworths led most of the retailers higher. Commodities were weak as well overnight, with gold, oil and copper all trading lower. Now, copper is often called Dr. Copper because of its unique ability to diagnose and predict the world economy. Well, for the past couple of months, the doctors put away the stethoscope and shrugged his shoulders. The price has gone sideways because the copper traders are torn between the better-than-expected recovery in the United States and the slowdown in China. And as for Europe, well, anything could happen, and probably will. Finally, the Australian dollar dropped to around 103.5 today because of the general risk-off mood of financial markets around the world. It's now down 4.5% from the February peak of 108.5. And that's finance.